countdown. The Hangout on Air is live. Welcome, good morning. Happy Friday, everyone. It's almost 4th of July. I am sitting here, I wanted to say, representing. I've got my Smart Sheet mug.
Oh.
I've got a Smart Sheet mug, but I'm not smug. Get it?
Wow.
Cool. I got some swag too.
Sarah's got her power box there from Smart Sheet.
Oh, that you got for tweeting. When we did that tweeting for swag, I want to keep that up.
I know.
I want to get for Linda Russell. I have a T-shirt. My T-shirt. Keep calm. I'm a QuickBooks ProAdvisor.
Where'd you get that?
Where'd you get that?
They're wearing those at Scaling New Heights, I thought.
They were at Scaling New Heights. I had a friend that went, and she brought one back for me.
Oh, that's nice.
Okay, so by the way, I just discovered something, and Yvette, I'm sorry. Apparently I can actually turn your cameras on even if you have turned them off. So I got to be careful about that.
Wow.
Really?
We have a pool.
Oh, no.
I don't like that.
So I didn't realize I've never played around with the control room toolbox. What?
Did you turn it off?
I did turn it off. I turned it as soon as I realized I had turned it on. I turned it right off. So.
Wizard of Oz here.
Wow, you put a little bit of tools in Seth's hands, and look what happens.
I'm just out of control. But this is cool. I hadn't played with this before because I'm usually busy trying to run the Hangout.
Absolutely, and now, yeah, I knew that the volume was there. I didn't know the camera deal.
Yeah, well, you see the icon, so I can actually turn your mic on and off, and I can apparently turn your video on and off. So let's see if Tim is actually dressed this morning. I'm going to turn this. That would be great. See, you didn't know this was going to be that kind of a hangout.
I'm glad the Joanne's is towards the pool.
That's right.
That's funny. So another thing I learned this morning was that, when you do these hangouts on air and you're doing them with, you have to start it by doing a hangout on air. If you go to the events, it doesn't link properly to YouTube, and it doesn't do the Hangout on Air properly. That's the problem Eric had run into when he did the one he did on that calendar app a few weeks ago. So you have to start it as a Hangout on Air, and then the Hangout on Air creates an event. And I just realized now, because every time I'm posting links to the event, it's using that generic banner. And I'm like, how do I change that? So, of course, I went in to edit the event, and, of course, you can change the theme once the event's been created. And so I've got Eric seems to love this picture of me that he cropped from one of our videos that I've now put at the header of the event. It's on my other screen. That's why I keep looking away from the camera. But so, it's one of those things. This is what I'm learning the same way. This is what I often teach people, is you learn this stuff by playing with it. Just go in and say, let me see what this does. Almost like a kid with a curious mind. Just be careful about, you can hang yourself with this stuff too. Yeah, and you can end up turning someone's camera on who doesn't want it to be turned on.
Nice.
I saw a website that had pictures of people had done little videos or taken pictures like in an office or something, and in the background were like passwords on the wall.
Great.
Oh, wow.
There was a military one. It was on a big whiteboard, and it was in, marker.
As a gag, you could put up like fake passwords behind
Yeah, that would be fun.
because people I'm like that. I'm a background lurker. I look at people's backgrounds to see what they've
Or
got
you
going
can
on.
go further and create a site to capture that and capture them people, and then turn on their cameras and see what happens.
There we go. Whenever I get what's obviously a phishing scam, we all know what a phishing scam is, I assume here, right? I always put in bogus passwords information, and usually it's colorful language aimed at hoping that somebody's going to see this, thinking that they're going to be getting into my bank account or something, and instead they're going to get a series of expletives, letting them know how I feel about them.
That's good.
So that's my story, and I'm sticking to it. So how many people have started using the LinkedIn publishing feature?
I've tried. I don't know what's different about it than just posting to LinkedIn.
It's because it's actually like a blog post, and it goes into a different area. When you just post a status update, it just goes into your home status feed. But here, I'll show you what I mean, because I started doing it this week. I put up 2 posts this week with it. And James, don't worry, we're going to get to you. We always spend the first 15 minutes on banter.
Yeah, no problem.
Well, I have a newsletter that I put out every other week, and it is shared to LinkedIn. I didn't know what the advantage of doing the share versus the publish in LinkedIn.
Is that Paperly?
Yeah.
No.
Well, no.
No. The
Mine is a
Paperly is
different
something
one with the
entirely
blog.
different. So here's my LinkedIn profile, and notice what it's doing now is when I've actually published blog posts, it puts it right at the top of my profile. It says published by Seth, right? And if I click on say something, was the first one I did a few days ago. For one thing, I think this reaches more people, right? Anybody who's quote following me will see this and get a notice about this. And it's like having a blog on LinkedIn where you have a much bigger audience, than you likely have even on your own blog. So it's about reaching people, and because it's on LinkedIn, I know for me, I'm focusing on content that's centered around building your career and growing, that sort of thing. Not so much. I'm not going to do QuickBooks tutorials necessarily, although now I want to see, and let's take a look at this while we're here. So if I scroll down to the bottom, here, and people can post comments on it. And of course, the people that they're connected to on LinkedIn are going to see that. At the bottom, I was wondering, where do you go to see all your posts? And there's my lovely Sync Manager message. I get this about every 30 minutes, 2 of them.
Oh, well,
Nice.
And I fixed it so that I am actually syncing, but I'm still getting the error message. So if I
you gotta call Intuit support.
well, I had actually gone to the extreme lengths of basically deleting my QuickBooks company in the cloud side and creating a whole new one and syncing it. That fixed the problem so that my company file would sync, but I'm still getting the error message every 30 minutes, and every once in a while I'm just opening up the Sync Manager and checking, and it is syncing. So that was my main thing I was concerned about, is because any of the add-on apps that I'm using don't have the latest data if it's not syncing. So anyway, this is the ADD Hangout for the week.
Hey, Seth. Hey,
Yes,
Seth.
sir.
Is that, so this is through LinkedIn Premium, right?
I guess, I don't know. At first I felt very special when I got the notification that I could now publish on LinkedIn, and I'm always curious, okay, is that for everyone, or am I actually special? But apparently everyone is getting
I
access
got
to
it
this.
too, and I don't have premium, Tim.
Okay.
So there you have it.
So I'm sorry for coming in late. I jumped ship from one computer to another.
You're so annoying, Tim.
I think I blew up the other computer since it's just...
We call from
It's your bandwidth, Seth. For some reason, your bandwidth just shuts it down. So my question, so Nimble, maybe you guys talked about it in a prior session, Nimble disconnecting from the API, LinkedIn API?
Well, John Farrar announced that, but then I thought I saw something, and I haven't had a chance to look more closely yet. But I thought I saw something that suggested that it's not going to be closed entirely or something. So, but clearly, and I've been getting a lot of error messages back from Sprout Social about the posts that I've scheduled to go to LinkedIn. So they're definitely doing something with their API, apparently aimed at cutting off some, if not all, of the access.
Okay.
Hey, who removed Joanne from the video call?
I think Joanne did.
My other
Yourself?
Well, she
My
did say
other
she
computer
left,
did it.
so she's been removed.
So back to LinkedIn publishing. So trying to stay focused here, guys.
We're not helping at all.
Good luck.
So I've got these 2 posts. In a couple of days, I've had over 200 views. Of course, so here's where you go, and if you remember from about 2 minutes ago, the way you get to all your posts is if you're in one of them, you go to the bottom of any one post, and you'll see this where mine says "See all Seth's posts," right? Mm. On Gina's, it'll say "See all Gina's posts." It won't say "See all Seth's posts." So I just want to make sure that's clear. But it would be great if I could get it to say "See all Seth's posts" on everybody else's profile. So
You check the control room.
So here, exactly. I'm going to check that next. How do I take over everyone's LinkedIn? There's an app for you. Hack into people's social accounts and pretend.
Oh no! Please.
So
It's called NSA.
so they just listen though, Tim. And then they come to your house if they don't like something they see. So here's my 2 posts so far, and of course make sure you include an image because as you can see it makes it look much prettier. Now if I go to my home feed here and I want to, initially you go to post an update, but then you see this little pencil thing. And of course you have to be curious enough like me to want to click on things. So you click that and that's how you can create a post. Now what I'm curious about is can I embed a video? I know I can add a picture, but no, there's no option. So my next thought after publishing the first 2 was, wait, can I put a video in here? That would be awesome.
Can we post our Hangouts?
Can you right-click on the body, see if anything happens?
Well, no, you're just going to get the standard browser.
Oh, okay.
Shortcuts. But so I can put in hyperlinks. I can I can put the embed code for the video here.
Right,
Bingo.
right.
Ooh.
That would work.
The embed code in.
Yeah, that would be totally cool.
So that's see again. This is what we're all about here is learning how to do things and do them more and do them better, and
Now I
do
have
them
something else to do.
and do them more better. So my suggestion to you is to start drinking heavily. No, I'm kidding. That was an Animal House reference, by the way. I hope you all caught that.
I was in an Animal House.
So was I. I think I made Animal House. No. So my suggestion to you is to start posting heavily on LinkedIn because you have access to millions and millions of eyeballs potentially that way. And it's another hook that you can put out there to hopefully grab some fish and bring them into your pond, if you know what I mean. So I would highly suggest starting to take advantage of this because it can only be good. And I've already gotten some nice responses from people from what I have posted, some of which have been sent privately. I love poking fun at big corporate America.
No.
No.
I do. So if you haven't already, read this one called "What If My Success Is Defined by My Happiness?" And I have one particularly good little dig at big corporations in this, and then but this is my favorite quote out of this, and it has to do. We talk a lot about like having abusive clients and that sort of thing, and this focuses on where I had some particularly abusive bosses in my life, and I'm going to share my screen back again. I know that you're not seeing what I'm pulling up, so let me show you this.
We see the laundry.
So if you haven't,
I'm so sorry. I thought I had muted that other computer.
No worries. So this is what I love. Teach me and I'll become a better employee. Berate me, especially in front of my peers, and I will become a nervous employee who is now even more prone to making mistakes. One of my favorite quotes from that. But it's what I don't ever get about companies, and I see this with big companies, and you see it with small companies too, but I see it a lot with big companies, especially the ones I had worked for, where it almost seems like it's par for the course that management treats their subordinates in this way. And just from a strictly logical standpoint, it makes no sense to me why on earth you would think for a minute that yelling at and berating somebody is going to encourage them to do a better job.
Right.
All it's going to do is make you feel powerful for a minute. It's going to feed your own ego. It's going to make somebody else, hate you. And the last thing they're going to want to do is try harder to do a better job for you. If anything, the effect it had on me was, time to put out my resume and start looking for a new job. And I did. I went to 3 different jobs consecutively where I had this kind of experience. And then finally I said, you know what? Maybe it's me. So maybe I just need to start my own company. And that's what I did.
Well, it's interesting you say that, Seth, because I know I've given you all updates on the nonprofit I was working with.
Yes.
We gave them 30 days notice, about 30 days ago, because they were doing exactly this. I mean, I would think that nonprofits would be philanthropic and, good, but they're just like attacking everything. And it just
a lot of insecure employees and bosses that are afraid about getting blamed for things, and so they try to deflect it onto others.
Yeah,
okay.
absolutely.
Well, we're dealing with the shackles they put us through,
Yeah.
and yeah, they're on the way out. So, and they're getting worse and worse as the days go.
You
Yes,
can
they
go rain
are.
on someone else's doorstep.
Yeah.
So
And-
it's,
yeah.
go ahead.
Sorry. Well, I was just going to say, and then you look at, like, historically, they have new accountants every year. No
That's
one
good.
makes
Not
past
a
1
good
year.
sign.
No.
That's a good question to ask when you're vetting a new client.
Yeah.
I'm putting that down, Sarah.
Well, that's why in the CPA profession,
Absolutely.
as part of the intake process, a lot of CPA firms will ask to speak to the outgoing CPA firm, and one of the questions they, of course, ask is, why did you part company? And that's often documented in the work papers. So that's very commonly done, and it's not a bad idea is to see if you can talk to your predecessor when you can. In the CPA profession, it's sort of part of the standard procedure, so it's a little easier. As a bookkeeper, you might have a harder time getting them to let you talk to their outgoing bookkeeper, especially if there's anything shady going on. But it's 8:15, so we've got to get into our topic for the week. Before we do, just want to remind everyone, we have now 5 courses on schoolofbookkeeping.com. Cloud Accounting with QuickBooks Online is being rolled out as we speak. I put 5 new lessons out at the beginning of this past week, and I am likely going to start recording and producing and putting out the content for Mastering Excel for Bookkeepers. So that should be getting rolled out starting in the next week or 2. So we're going to start the Excel stuff, a little heavily. So I'll be rolling out content for both Cloud Accounting with QuickBooks Online and Mastering Excel for Bookkeepers simultaneously. So please let all of your friends, family, and loved ones know about this.
When's Zero coming out?
That is down. It's further down the list, but it's coming. It's definitely coming.
That's awesome stuff. Good job.
Thank you. With that, I wanted to, as you know, I am always on the lookout for, tools and things that are going to simplify our lives, especially things that are going to simplify the accounting and bookkeeping and general business management and software applications that make that process go easier. So earlier this week, a friend of ours, many of you know her, Beth Damus,
Yes, I know her.
one of the top 100 pro-advisors, she tweeted something out there to me because in response to something I had put out there about, I think it had to do with financial dashboards or cash flow projections, something along those lines. And she responded to me and mentioned that I should check out something called Finagraph. So I did. I went on their website and I started checking it out. I watched a couple of their videos and I said, looks interesting. And I said, I'd like to know more. Now, normally, you know me, I like to usually go without even telling the company and play with the tool and bring it on the Hangout. But in this case, I honestly thought it would be best to, bring them on right off the bat because it just looks like it's, and I think you'll agree with me when you see it, it's the sort of thing that probably will need, somebody's sort of guidance as far as understanding exactly how it works. And so it's one thing if I know it's going to be simple enough for me to get in there and just start playing with it and figure it out, and a lot of things I can do that with, but every once in a while I come across something that I'm like, you know what, this will just be better served if I bring the person on right away who knows the product, who can show us everything we need to know about how it's going to change our lives and make our lives easier. And with that, I wanted to introduce James from Finagraph. And James, welcome, and thank you so much for joining us this week. And please introduce yourself. Tell us a little bit about who you are, what you do, who you do it for, and why you do it.
Yeah, so I'm James Walter. I'm the CEO and co-founder of Finagraph. And we actually come from the lending space. What we do is we provide software to lenders to allow them to evaluate a company pretty quickly, right? Imagine they want to, or a business owner comes in looking for a loan, and typically that can take 2, 3, 4, 5 weeks of underwriting and understanding, what's going on with that business. So we wrote a tool that links into QuickBooks and other accounting systems to help facilitate that process, to make it a lot easier for the business owner, a lot easier for the lender to really understand what's going on. And in doing that, we found that it's also super useful as a tool for bookkeepers and for business owners directly to understand their business in a different way. I don't know if you guys have business owners that look at their balance sheets and income statements every day, but or even once a month, or maybe even ever. But we don't find that that's very common. So we put together a Finagraph report that shows what's going on with the health and overview of the company. And it's super useful to be able to explain to a business owner what's going on in their business and really show, you know, how they look to, you know, financial professionals, if you will, as compared to others in their same industry. So we have this really cool tool that is what I'd like to show you guys today, and then I'd love your feedback on how you think you might be able to use it, either for yourselves or for your business owners or even other accountants. But yeah, so my background is I was actually at Microsoft. So you were talking about big corporate America. I lived in a little bit of that for a while. Ooh. And there's some definitely good stories that can be told there. But yeah, I left Microsoft to go start this. My co-founder's from Bank of America. His name's Corey Ross, and we really just wanted to streamline the communication process to get business owners, you know, more information in a usable way. Right? They don't necessarily log into QuickBooks, use it, and stare at the reports like they could. So we wanted to really transform that and make it super simple and really approachable. So one of the things I think I hope you'll see is that we err on the side of simplicity. It has to be super simple, yet it has to be valuable. Right? It has to be very clear, actionable advice, or if not advice, just information. On what they can do or how they can view their business. So that's us, kind of at the top level. Technology that's based in the cloud. In fact, all of you can use it right now. If you go to finagraph.com, there's a free trial button, and you can type in your email address and have full access for 2 weeks for free. And
How do you spell that?
The website is in the description of the Hangout. If you go to the event page, you'll see it says About Finagraph, and I've got the link right there. Okay. But it's FINA graph.com.
I see it. It's on a whole nother page. Yep.
There you go.
Sorry.
The cat in the background.
It looks like you have a tail out of your head.
Is that me?
No.
No, Tim.
No, Tim's got a cat in his background.
Oh, Tim. Okay. Yeah.
Not anymore. Oh, there it is. With the water bottle.
So yeah, I can take you through it, and I think I'll keep it pretty high level. There's some details that you can get into if you're interested, but I really want to use keep it from your point of view, rather than a lender point of view, or rather than even a business owner point of view. So let me see. I'm going to try to do this share my screen button, and hopefully full screen. Yeah, let's do full screen. Hopefully you'll be able to see my screen. Let me know if that works.
Yep, we got it.
That works.
And it's my first Hangout. I'm feeling pretty advanced here. This is good.
Pretty powerful, huh?
Yeah, we didn't even have to talk you through it.
Yeah, kind of our claim to fame is on the homepage just right away. This is, this was completely generated from a QuickBooks customer in about 60 seconds with no data entry. Right? Wow. And so that's the idea, is to be able to get all that intelligence that's locked up in QuickBooks and the accounting system and display it differently. And not just for now.
Presentation.
Yeah, and not just for today's numbers, but just and a historical view, and to really see where you've been and where you're going. So let me just show you how this works. So if you sign in, you guys would each have what we call a provider account, which just means you can access multiple companies at the same time. And you get a dashboard of the companies that you're currently working with. And it's a simple overview of, okay, you've got these companies, what's their latest activity, do you need to send an activation, or just kind of manage the account. But it sorts itself so that if you have something that you need to do, it tells you by just placing it to the top. Like Clear Copies, you sent them an activation, but they haven't clicked on it yet. And I'll explain all that in just a second. But here's what I really want to show you. So imagine you've got, again, I want to err on the side of simplicity, but imagine you've got a brand new business that you want to bring in. You log into your dashboard, you hit Add Business. Anybody have a good business name?
Nerd Enterprises Incorporated.
Nerd Enterprises.
No, not that one.
No, that's a terrible one. Not this one.
Quick.
School of Bookkeeping.
That's right, School of Bookkeeping.
All right.
True. Yeah, let's do that.
So,
SOB, beautiful. I love it.
I knew it. I knew it was something for short.
Yeah, exactly. And then you just say what industry they're in. Of course, you guys know what NAICS codes are, but you can look them up if you're not sure what one is. I just use a sample that we have in our database. And then generally where they're at in the country. I'm kind of in the Northwest here, so we'll use the Northwest. And then you hit save. So 3 pieces of information, name and roughly what industry and roughly where they're at in the country. And then that company gets added to your dashboard right up here.
And what if I put the wrong NAICS code? I'm just curious, how critical is that? Is it really important, or?
Yeah, what it'll do is it'll probably flag the wrong things for your business.
Oh, and you want industry comparative data too, so that's why that becomes very important. You want to be able to compare your stats to the standard in your industry. Okay.
Yeah, exactly right. So if you do the wrong one, you can change it, of course. You can remove it and all those great things, but you want to get the right one. So I have opened up I'm using QuickBooks here, but just a sample QuickBreeze trading company and Premier. This works with QuickBooks Online, QuickBooks Desktop, works with Xero. But you just want to have the company file open that you want to pull the information from.
Wait, so I'm sorry, just to make sure I heard right. So QuickBooks Desktop and QuickBooks Online and Xero, it works.
That's correct. Yes.
Okay.
Yay.
But yeah, have the company file open so that we know which one to pull from. Makes it a lot easier for you. We don't use the Intuit awesome sync manager. We didn't want to put an error code on your screen every 30 minutes. No, we wrote our own to make it a really seamless experience. You know, again, simplicity has to be super simple. You don't have to go through the process of installing this whole thing. Okay, so here we are. We're going to hit the new Finagraph button. We give you some. Hey, we're going to link into your accounting system. You can change it to QuickBooks Online or Xero, but really it all comes down to this button click. So this is where my magical 4 years of research and development kicks in, and we link into QuickBooks in this case by using our financial linker that we've built, and it launches from the cloud and kicks in. So
if I have my client using this and they're on desktop, they'll have to go through the process of configuring the link from their QuickBooks Desktop to Finagraph. But then as their accountant, I can log into Finagraph on the web and I can see the data.
That's true, and the process to set up the link is exactly what you see right here. This 30 seconds. So it'll probably take 40 seconds.
And while it's doing that, so you can have like different platforms like Xero and QBO and QuickBooks Desktop for your variety of clients, right?
That is exactly right, yes.
That's great. That's amazing.
And Seth, if you have QBox, you can have your own copy of the desktop to do it with.
That's a good point, Gina. Thank you for bringing that up.
But you don't have to have the data file in your office to do this.
That's correct also. You can there's a users button, a couple of ways to do this, but you can add the business owner as a user, or maybe they have an on-site accountant. You can just add them as a user, and then again it shows up in your dashboard every time they do a collection.
So are you linking to reports? Are you linking to tables? Are you creating like an OLAP cube that you're getting this information off? How does it work?
Well, that's a great technical question. So what we do is we actually go into the general ledger and look at different queries. We write our own queries into the accounting system, right? Because QuickBooks Desktop is different than QuickBooks Online.
I know, for example, there was a thing called it was a QuickBooks report writer, and they were basically going in and getting the information from the QuickBooks reports, and in some cases they're going to the underlying tables. But I mean, in some cases you have to have the tables linked to get the information. So I'm just kind of curious.
Yeah, it's almost a hybrid of that, because we do get various reports. For instance, you can see that we've kind of got a little mini balance sheet and income statement here over in the health overview.
Mm-hmm.
So we do get those reports, but for things like what's going on with receivables or even inventory, we do different types of queries, and it's just that's one of the reasons we wrote our own linking technology to be able to go and get the exact information we need to compose this.
And how does it work with dirty QuickBooks data?
Yeah.
Yeah.
You see all these red flags?
Mm-hmm.
This is a dirty QuickBooks file, actually. This is so I'm
We
not
mean
necessarily
dirty as in maybe corrupt.
Oh yeah, you should uncorrupt it first. Yeah.
That's in the vetting process, Sarah.
I mean, and that's what you're talking about. Really, is a classic example of garbage in, garbage out. Obviously, before we start using a tool like this,
we all know that how many of our clients really have clean books.
Well, but that's why, as the practitioners, it's our job to make sure that we clean them up before we start using a tool like this.
Oh,
Are you-
absolutely.
Well, to that point, and I don't want to derail this conversation much. Are you guys using a specific thing to go through all the books, like Bonnie Nagayama or somebody's tool to go through the books just to analyze the state of them when you take on a new client? Do you guys have that? Some process. Not even. I don't think you would have that, James. That would probably be more on our side. Yeah.
Yeah.
So that you have good books. Do you have one, Sarah? Do you use something?
Well, there used to be a thing called Audit My Books. I think they changed the name. I'm not sure if it's still out there. You would basically go through the Sync Manager where you'd upload the file to QuickBooks, and they'd run all these analytics and, you know, looking for unusual relationships, that kind of thing. And
I wasn't real impressed with that.
You know what? I have an idea for next week's Hangout. We're going to talk about this, is how do we go about verifying QuickBooks data and cleaning it up when and where needed. That'll be next week's topic, but I wanted James to be able to have
I know, I'm sorry, Phil, but it's a big problem. It's an issue.
We're assuming that the data's good.
And the quick recap. The quick recap for now on that is what I do with my own clients is I run the balance sheet. I use the balance sheet as a checklist. I go down every account, make sure everything looks right, get the client to verify that, and then we run through the P&L line by line, and that's how I verify the data. Just like when a CPA firm does a review engagement, I do the same process. You basically beat the heck out of the balance sheet and then review the P&L, and that way you make sure that the financial data is accurate so that when it goes into a tool like this, we have accurate and reliable information. Take it away, James.
There you go. No, that's fantastic. That's actually one of the reasons we were excited to work with bookkeepers, right? Is because the data can be put into a clean state. You know, a lot of times with our lending clients, we have to outsource our pre-qualification process to get the books cleaned up first, which is another thing that we can work with you guys on. Okay, so let me give you the overview. So we've got a full breakdown of this company. Over the last 5 years, right, 2009 through 2013, over the last 4 quarters, meaning really the last year broken into quarters, and you get a health overview, these really interesting risk indicators, and even some KPIs that are useful for you and the business owner to understand.
And for those who don't know, a KPI is a key performance indicator. I always like to explain what these symbols mean, just because not everybody might know.
And that's a really good point too. So when we let's just take the current ratio. Seth, I think you had mentioned why the current ratio or why the quick ratio.
I have videos on it.
Well, we kind of put the cheat sheet right here in front of you, right? So to remember, you know, why do I care about the current ratio? Well,
can you capture all that information and put it in a report?
It's in this report here.
Yeah, but I mean, if you want, like, there's some tools out there that basically you can create a report or deliverable to the client where it would have an analysis, or maybe something like this would be a little supplement that you could give the client as kind of a...
Well, looking to the right, they've got a get shareable link. So it seems to me that what I would do is get that link, share this with them, and then do my own write-up on it.
Well, and do you guys also have, like, I mean, I know this doesn't say it here, but industry standard? Is there a way that you guys can bridge that in, or is that a future thing, or is that?
That was the idea of the NAICS codes. If you were paying attention at the beginning, when he links up the company, you enter in the NAICS, the NAICS code. That is specifically what they use to do the comparative analysis.
Perfect. Okay.
There you go.
See, James, you don't even need to do the demo. I'll do it for you.
I'll move the mouse if you keep talking. This is great.
Okay.
So, can you benchmark it? I mean, you have like industry standards you can benchmark it against.
We do. Yeah. Let me go for just a couple of seconds here, and then you guys can jump into additional questions. But
sorry, James, we do that here.
No, it's fine. I like it actually. This is actually really fun. But yeah, all of these green check marks and/or red flags are based on industry data in the ratios, asset ratios, and even debt service coverage ratio area. These risk indicators are really year-over-year, quarter-over-quarter, month-over-month indicators saying, hey, you know what, cash balance is going up or down, and it's, again, super simple, right? You just have a green check mark if it's good, and you can hover over it to get more detail if you want it.
What does misfinancing mean?
Ooh, that's one of our most impressive features ever. So let me show you what this means. I'll just hover over this one. What we do is, because we can check, you know, not just a balance sheet and a income statement, but multiple at the same time, we look for changes in things like long-term assets. Okay, did they buy a piece of equipment and put it on the books as a long-term asset? And if they did, you know, how did they pay for it? And in this example, we flagged it because they didn't use any long-term debt, and they didn't use retained earnings. So they might have used short-term debt, which would be bad for a long-term asset, or they could have used their HELOC or a credit card. I mean, they could have done something. So that's potentially pretty bad, right? If you
How does it know?
because it's on the balance sheet or in the reports as a long-term asset. So, for instance, in 2012 we didn't identify any, which means they didn't have a change in long-term asset that didn't match a change in retained earnings. Or
So if they bought it with cash, then that would come up as misfinancing.
no, it should be because that would come out of retained earnings,
Oh,
right? Yeah. So yeah, we can do things like that, and that's pretty interesting for a business owner and really you guys to be able to say, hey, did you buy something? It could just be misclassified, could be in the wrong line item, but it's again we think of ourselves as the flashlight that shines the lights on things that need to be either talked about, looked at, fixed, kind of throughout this section.
So it kind of saves me the trouble of doing the analysis of the statement of cash flows and looking at operating versus investing versus financing to look for anomalies to see what I need to discuss with the client. Is that right, James?
That's perfect. That's exactly right.
But can you zoom in and see how your program came up with that?
Yeah, so in this one, any hover over, you can do that. But let's take the current ratio, I think, or any of these ratios. Let's just take the current ratio. If you want to zoom in, you can just click the row, and you can see that we've given this current ratio a green check mark. And if you hover over the green check mark, you can see that the industry, comparison has happened. The industry is at 3.98. Their current ratio is, the current assets divided by their current liabilities to 4.04, which, hey, good job, which is pretty interesting. Now, where we really get interesting for, as you try to communicate to business owners, hey, your current ratio is 4.04, good job, they might know what that means. A lot of times they don't. Hey, you got a green check mark, they'll like that. But imagine things like this gross margin, things that actually impact their cash balance. So let's zoom in on on the gross margin and really understand this. So the industry's sitting up here at 36.3. Your gross margin comes up calculated to 41. Hey, great job. You're above the industry. You know what that means at your level of sales here? That means it's $77,000 in additional cash that your competitors or peers may not have if they're actually operating at industry.
And James, how is your industry average data compiled? Are you getting it from other users of Finagraph who use the same NAICS code, or are you getting it from another source?
Thank you, Seth.
Yeah, both of those. So we use the same data as SageWorks, and we have our own database of companies.
That's great.
Okay, so this is...
What happens if, I'm sure you get these things mapped into different categories, what happens if someone adds a new account that you don't necessarily have mapped? How do you put the range big enough that it'll pop in there?
Yeah, as long as it comes into gross profit, gross sales on this example anyway. But we actually show you exactly where we get these numbers, and then I'll show you. We can go even further deep if you'd like to see it. But yes, look, there's a
trade journal as well where it compares. I know you do industry specifics sometimes. So does this also work like a trade journal?
Does it work like a trade journal?
Well, where it compares to different, like for instance, like an industry, it'll compare, have all the details to that specific industry, and compare it to others in the area. So, like, say, let's take an example: restaurant. Mm-hmm. I once got a restaurant that asked me, well, can we get some trade journal reports where we'll compare to what the other restaurants in my area are doing.
So just
so you mean a geographical industry comparison?
More specific, okay.
Yeah. So we do. How that works is, you remember the 3 pieces of information you typed in at the beginning?
Zip code.
Zip code. So you can get down to zip code, and then depending on how much data we have for either a specific zip code and we also do it by revenue band. This is the $1 to $10 million revenue band. There's also 0 to 1 million and above 10 million. So there's revenue band that we have multiple classifications on. There's NAICS code specificity, and there's geographic location, and they all come down to as much or as fine of a point as we can, as long as we have statistically relevant data.
Now, to the extent that you are using data from other users, what I'm thinking of is potentially if I link up my QuickBooks file in my industry to Finagraph, but my books are a mess and they really don't truly represent an accurate representation of what the numbers would look like because I have maybe assets classified as expenses and a mess of a set of books. Do you have any kind of a vetting process where you have a way of looking at that and saying we should not include this data in our industry average calculations because something doesn't look right, or how do you address that?
Yeah, we take the middle 80%. So
Okay.
we take off the top or the bottom 10 and the top 10, so that exactly those anomalies fall out.
Okay.
Better
Well, you're
bell
going to have to
curve.
trust that we know what we're doing, and we wouldn't be using your tool with complete garbage.
Well, so he's using kind of a standard deviation formula
Exactly.
to weed out the things that really likely don't represent it fairly. So that makes sense.
The outside of the bell curves.
Exactly. Yep. You guys got it. Okay. So this is
But our clients could dial in and see what you're showing us.
that is exactly right, and I'll show you that in just a minute. But I want to.
That's cool.
I want to break down this example just a little bit more, which is, your gross margin, you're doing a great job, you're above the industry, congrats on getting your $77,000 positive, but look at this big red flag over here, and this company has inventory. So by not managing your inventory very well, the industry keeps about 62 days of inventory, you have about 75 days of inventory on hand. But you've got an extra $30,000 locked up in inventory that you could use for other purposes. And when you start talking to your business owners about dollars instead of, let's say, a 4.04 current ratio, it's a lot more impactful, right?
Yeah.
You can actually show them what they can do to make a difference. And we find that to be very, very helpful, really, for business owners to understand. So we do that across a bunch of these different ratios and different numbers, which you can drill in on each of these. But in the end, what we do is we throw it on this cash impact map right here, so that you can see exactly, your gross margin, good job, positive. Your net margin, man, you're even doing good on your net margin, nice job. But really, what you look for is the big red line. Whatever the longest red line is the thing to be, it's the flashlight. Thing that we're calling out as something that you might want to address, or at least understand better. It's okay to have a red line as long as you understand it and you mean to have it. But if you don't even know it's there, hey, this is a great way to go figure it out really quickly.
Yeah, that also might be an indicator of fraud on the inventory because maybe the inventory really isn't there.
Oh, wow. Yeah.
Maybe it's been sort of a five-finger discount, and then it's a write-off at the end of the year when you find you got less inventory than you thought you had.
Yeah.
Tennis clients would never do that.
Oh, no. But their employees might.
And, as you think about getting into this conversation with your business owner, sometimes they may know this. A lot of guys run their business by gut feel, like, oh, it feels like time to order more inventory. But you can show them this in the numerical way, and then a graphical way, and then even some trend lines, so that they can instantly see, wow, you know what? I've got some positive trend lines here. This is great. And you can, if you want to turn some of these off, and let's say just look at sales to expenses or sales to profit or whatever, you can turn these on and off just right here.
Oh, nice.
The thing that QuickBooks is designed for basically people that don't know anything about accounting. And I'm just wondering, like, for example, Expanded Reports went out of business because even though they had a really good product, there wasn't apparently enough demand by the clients. I'm just kind of wondering, it take a fairly sophisticated QuickBooks client to, appreciate the value of these reports as opposed to someone that doesn't really, is more focused on doing sales for their business and just sort of regards accounting as kind of a necessary evil and is more concerned for their taxes and for their,
Well, but I think James brings up a good point, though, is that if we as the accountants are using this on our client's behalf, it gives us the data that we can use to put it in terms the client can understand by saying, look, here's the dollar impact of these things.
Exactly.
So I don't expect you to understand a quick ratio or even necessarily what the gross margin means, but I do expect you to understand that I'm showing you a metric here that says you've earned an extra $77,000, but over on the inventory side, you've got $30,000 locked up, so you're netting only $40,000 when it could be $70,000. Increase in cash flow if we start managing the inventory better.
So in a sense, it's really more of a tool for accounting professionals that have
Absolutely.
clients to try to visually communicate the impact of their decisions.
Well, the visual part is key. Like my entertainment client has been waiting for some visual representation, and I see it here. Like to your point, Dennis, they don't want to any of that. They would gloss over and go, huh?
Right.
But they would get the visual part and the dollar impact that Seth's talking about. That would make a huge impact for them. Going, oh God, I can't do this.
Especially,
Yeah.
And I have some clients who love numbers who would eat this up the minute they started looking at that.
Yeah, I
Surveys
think
are saying that they want more from
I don't
their.
think clients know what they want. They want it, but they don't know that they want it.
Yeah, but remember Sleater just recently did a little survey, and it said they wanted their accountants to be more than just cranking out a tax return. They want them more involved with their business.
Yeah,
So,
this is what I think clients are screaming for to get from their accounting professional. So anyway, James, please continue, because I know there's a lot more for you to show us.
Yeah, absolutely. You know, you talked about different levels of business owners, and it's a hard problem to solve with the right level of, you know, this is to some people this is a wall of numbers and they're going to love it, and to some people like, oh man, you know, geez, I really need this view, which is, you know, my charts.
And it looks like if I hover my mouse over the description, like AR days, it gives me an explanation, which is, again, that helps the client if they're willing to take the time and have the patience to read this and understand it. That can go a long way to helping.
Absolutely, and you know,
I'd go over it with them.
Yeah, I would too.
But and when you go over it with them, they'll have a reminder right here. And you know, one of the things we do if you see this hover bubble is we give it a meaning. Okay, your current ratio is determined by taking these two numbers and dividing them. Great. But the meaning is if it's a 1.35, it means there's $1.35. It's representing $1.35 in, you know, current assets to pay for every dollar in current liabilities. Okay, that's pretty neat. But the real thing here is, why do you care? You know, as a business owner, why do I actually care about a current ratio? So, you know, a low, if it's low, in this case it's not, but a low current ratio would indicate, you know, low solvency for your business, something to figure out. And you know, same thing with a quick ratio. Quick ratio, why do I care about it? Well, it indicates low safety. And then you can walk through what those mean with the business owner. And then, as you can see, we've got some possible causes and even potential solutions that you can work with them on to help them, you know, either change it if that's what they want to do.
Yeah, and the way I explain something like this to the clients that it really helps them understand is, I say to them, if you had to close the doors to your business tomorrow and you have a low, quick, or current ratio, what it means is you wouldn't have enough in liquid assets to pay off your liabilities tomorrow.
There you go. Now that's a great sentence, actually.
See, change your product, James. You want me to repeat that?
Hey, you're recording this, right?
Yeah.
Okay, good. No, I mean that's a good direct sentence. So
this is completely SaaS based, is that right?
That is correct. Yes.
Okay, so I guess the other issue would be, what kind of level of security do you have on this data?
Oh yeah, the best. So, you know, as I mentioned, we came from the lending space. And I can promise you the longest vetting cycle for security in the world must be either at the NSA or at all these banks that we talk to. My background, when I was at Microsoft, I have multiple patents in data security. Yeah, they're on my LinkedIn profile, but it's, you know, from the beginning we had to secure this. We knew we were in the lending and, you know, high value number space. And so not only do we have a fully audited yearly data center, but we also have our own encryption and data compartmentalization on top of that. So we've never had a problem passing any security review by any financial institution. So
basically you and your client can both log in from separate computers and see the same data?
That is a great point. So there's two ways to do that, and you guys will probably have use cases for both. One is you hit the users button and you can add an actual, let's say, business owner to this account. You know, you just add them by email address, they get sent an activation, and boom, they can see the Finagraph for this business. The other way to do it is if you want to have a little bit different experience where they're not necessarily able to upload it gives you a little bit more control. You can create a shareable link. Now what this does is it gives you a way to send them just a link in an email. They don't have to, you know, set up an account or a password. They send this link. In fact, if you guys go to this link, you'll see this. Go to this link right here, and you can set an expiration. Right, so hey, you guys go check this out. You've only got the next, I don't know, 7 days, and you can set a date here for when you want it to expire. So it's going to expire on July 1st, and it's not going to be available anymore. Now this is useful for, you know, if you have companies with, let's say, investors or boards of directors or just a management team that wants to be able to see some of these things, but you don't want to give them perpetual access. This shares just this specific Finagraph, not all of them, with that person that you send it to.
So this would be like a join me where you're not sharing your screen. You'd have total control over the. They're just basically watching your computer in a sense.
What it would be is they'd go to if you go to this link, they would just see
a web page, right?
They'd see this web page.
Okay, so
they
you
wouldn't
watch
have these buttons. You don't get these buttons, and they wouldn't be logged in as me. Okay. But what they would is just.
Do they have to set up a login of any kind, or can it be?
Nope.
Okay, so just anybody with that link can see this information.
That's exactly right.
It goes to their email address with the link, and they just click on the link, and then
click on the link, and this pops up, and then they've got all these hover overs, all these drill downs, all the chart changes.
Drilling down, or you could be drilling down on things, but they couldn't.
They can. They would just be doing it themselves.
Within their own company.
Exactly, within this one Finagraph. That's right.
Well, yeah, just they're on a web page, effectively, guys. So they get this link. It takes them to a web page that shows them this information without the buttons on the side. But other than that, James, if I understand correctly, they can still drill around and dig in and see all the rest of the same information.
That's exactly right.
Now, how do we prompt our client to get current data where we can create the graph, or they manually do it, or is it?
See, we need an app that smacks the client in the back of the head when we need it to.
How is the data updated? Do you have to manually update it?
It's updated when you hit the button. So
when we hit the button.
Well, whoever has a user access to this, could be the business owner, could be you. It's really wherever on desktop for QuickBooks Desktop, whoever has access to the actual QuickBooks company file.
So their computer would have to actually be on. They'd have to have their computer on so that they could, have
if you have a client on QuickBooks Desktop, it seems to me you'd have to call them and say, "Hey, I need you to sync up for Finagraph."
Got it.
Or have QBox and do it yourself.
Right.
There you go.
So, James, does this?
I love how Gina's bringing together multiple solutions that we've covered on this Hangout. That's
pretty good.
Then you can put the link to the for the board in your Smart Sheets version.
There you go.
Does this do cash? Does this do cash plans as well? I see that it does a cash impact. Is there also a cash plan somewhere in?
Not yet.
Okay.
We're adding a lot of really cool stuff that again, we came from the lender space and they didn't need that, but we're adding exactly those types of scenarios where you can imagine here if I have a slider where my profit goes up, or let me change that, my sales goes up but my profit doesn't, what's the impact? What if scenarios, and then future looking scenarios.
Okay, got it. And who do you see as your biggest competitor?
In your space, it's guys like Coralytics. They have a pretty cool. They're actually our neighbors here, and we like talking with those guys. But yeah, Coralytics has a dashboard that's interesting, similar. They do a little bit more on the predictive side, where we are on the this is where you're at compared to industry. Here's the cash impact of the decisions you've made kind of side, and we err on the side of simplicity, right?
I love the industry standard comparisons because that really, it's one thing to look at data, but if you don't have something, sort of comparable to compare it to, it doesn't really do you as much good. So.
Have you heard of Profit Seek?
Profit Seek, was that?
Profit
Seek. I had looked at that a while back, actually.
They're back in Minneapolis. They've got a pretty good product.
Okay. Yeah, there's a bunch of players. I think when you talk about the biggest competitor, it's you try to look at the ones who are the most similar. But
SageWorks has more of a verbiage type of thing, artificial intelligence. I don't know if you've seen their reports. They have like different types of reports depending on which plan you have.
There you go.
Now, can I print that pretty report to my color printer and include it as part of a proposal or a month end? Or
there you go.
I like that idea, Sarah. I think that really was what was missing. I did deal with Coralytics a lot, and that was the piece that was missing, was being able to present it to the client. Mm-hmm. Now, you can have the client log on to this and actually have everything. I think it confuses them. I think they want exactly what you said, Sarah. They want just a picture of the graph and just, verbiage of what this month's, issues are, and that's it.
Call it a day. Yep. I gotta jump, guys. James, do we get? I want to get a demo or something, or to try it out, or is that something? You, okay.
Yeah, you can do that right now. Just go to finagraph.com. There's a free trial button, and you'll have 100% access right
awesome. Away. Thank you. This was amazing, guys.
Cool. Great.
Thanks, guys.
It could be a good tool for getting SBA loans too.
Aha. There you go. Yep.
Well, you can give a link for just a short period of time to just the loan officer.
That's exactly right.
So we have just a few minutes left, James. Let's talk about pricing.
Yeah. So retail price is $49 per business per month. We sell directly to accountants, bookkeepers, CPAs for about $10 per business per month, so about a 80% discount.
Okay.
Nice.
Yeah, and then there's a pricing link on the website, and it gets even cheaper depending on how many businesses you bring on board.
So if we wanted
right, so I know we had a lot of questions, so James, maybe we'll have you back again in a week or two. I know we talked about doing for next week's topic, the topic of verifying that the QuickBooks data file is clean and how to clean it up and what tools are out there for that purpose. Tim has requested in the chat that we hold off on that till July 11th because next week is the 4th of July.
Yeah.
So
that brings me to that. Are you having your hangout this 4th of July, Seth?
is Monday the actual day of the 4th of July? I mean,
4th of July is Friday.
Friday.
So it is Friday. Did I say Monday? I meant Friday.
Yes, you did.
Yeah.
I'm
I've got
not
Monday
having
on my
my
brain.
hangout on the 4th. First time in 2 years, I will not be having my hangout on a Friday.
Yeah.
I think I will be here and available to do the hangout, but I'll be available to do it. So let's put it that way. So I'll plan on doing it, but we'll probably just not have a topic and just keep it open for those who want to join.
I have a question on the $10 a month for accountants. If you wanted to get like a permanent demo company, you could pay $10 a month and you maybe have it linked to like Larry's Landscaping or something like that. And
yeah, we actually take care of that for you. We include a sample company in your dashboard. So if you click your name up here, go back to your dashboard. And then what it does is it walks through a sample so that it's really helpful for prospecting or just explaining. So it's called just the sample company at the top.
I was just thinking maybe if I could just pay $10 a month and then I'd have,
But it's included.
It's
Yeah,
included.
that one is included.
Or if I wanted to maybe use my own or something, I don't know.
Yeah.
Or try it with Zero, see how it works with Zero.
Yeah. Yep. You can do it.
Can I brand it and take off your logo and put mine, or put mine next to yours?
You can. We have a one-time fee for that, but yeah, it's a simple. It's a really inexpensive fee. That we charge about a nice one-time fee to put your logo here instead of ours, and then then it's yours. We also, check this out, we have a video that we can brand for you that will have your logo, and it'll go through what we call the business value, so you can explain what Finagraph is to your businesses with your logo, your intro, and it's pretty interesting.
Nice.
I belong to a group called the Accredited Small Business Accountants, or it's basically focusing on this type of analysis, and I'm thinking maybe just sending a link to the president of the company and saying, hey, you got to check this out, because I think it'd be a good tool for members of the Association of Accredited Small Business Consultants.
That's great. Yeah. Yeah, consultants definitely get good value of this as well.
So is there an affiliate program, or I guess there wouldn't need to be, because as an accountant I can just get it for $10 a month, and if I wanted to bill that back to my clients at a premium I could,
That's
or
right.
just build it into my fees. But
Yep.
But either way, that seems pretty awesome as a service, just as a value add, to say to my clients, hey, by the way, because you work with my company, I also offer you this, and it doesn't cost you anything extra.
Or you could give it away for free for the first time and see if there's interested in the any interest in the analysis as a separate product.
I can't see I would see as an advisor that you would want to put it in your toolbox and do value pricing and just price it in.
Yeah.
Yep, I think so. I don't think you would want to charge specifically for this to a client.
I found no interest in that whatsoever. Like I said, I don't think they know they need this.
Well, it sets you apart from the person next door.
There you go.
Yeah, I don't even do that with Bill.com. Like Bill.com, I don't bill back to the clients. I just include it in the fees.
Mm.
Yeah.
So, because it's the same idea, Bill.com. If you have the accountant's sort of version of it, then it's a similar concept. You pay $30 a month instead of 50, and and you get billed for it instead of the client. But
you don't charge by user.
It's per company.
It's per company.
So if I have a board of directors and I have 6
Yep, that's all
users
included.
that I want to give them access to, that's not a problem.
Not a problem.
Yeah. So it's just based on the company. So if
I like the link idea.
Yeah, the
That's
shareable
good
link.
for your board of directors talking about the finances.
Yeah.
And if James, if the client is using QuickBooks Online or Xero, then I assume I can go in here at any time and just click to update it right from here.
That is exactly right.
So, because I know we talked more about the desktop edition, but so for QBO or Xero, it's super simple. I don't have to worry about asking the client to do anything.
That's right. And
We go in, close the books,
hit
make
the
sure
button.
they're clean, then we do this. Right?
There you go.
Yep. So, so in 2 weeks from now, that's what we'll talk about, is cleaning up your client's set of books. And maybe what we'll do is we'll try and divide the hour up and give 15 minutes to Xero, 15 minutes to QuickBooks Desktop, and 15 minutes to QuickBooks Online, and then 15 minutes for Q&A. We'll divide the hour up in 2 weeks so that we can look at this, and then maybe, James, I can have you back, because I know we stalled you a lot with all of our questions. I'm sorry about that. But I think it is a good thing, because this way, it's good for us to take this kind of a deep dive into it. But I know there's
I don't know
more.
how you set it up.
Yeah.
Yeah.
So, well, you showed us how to do the setup. That's easy.
The setup's quick.
Well, you're mapping. I mean, people's trial balances are all over the place. Do you actually map the trial balance?
We pull information straight from balance sheets, income statements.
So it's looking at the account type only.
I would think so. You'd have to make the range.
types.
I mean, that's how you make the range big enough to pull new additions, I would think.
Yeah. So again, if you're
you have to
pulling
clean
from
up the books.
yeah. You've got to have. It's like anything else. Just like the balance sheet and the P&L itself are worthless if the data is not, clean and accurate.
That's right.
So the first thing you got to do is beat the heck out of the balance sheet. Go through starting with the bank accounts. Make sure they're reconciled up to date. Make sure the reconciliations are done accurately. That's probably 80% of the battle right there, because most of your transactions are going to run through the bank account. Then you continue down. Is AR accurate? If accounts receivable is accurate, your probably verified income is accurate, but you'll get back to that later anyway.
But
And
I
you
have
just-
a lot of clients that will use another asset type account for inventory because they're using another piece of software to run all the detail, or accounts
I have
receivable.
clients that put their loans in their expense account.
Well, that's
They'll write an
different.
auto expense, and then the
I'm
expense
talking
account will be
about
auto.
defining the accounts. You'll have inventory accounts, receivable accounts, payable accounts that may be in QuickBooks as not the QuickBooks designed account, because they're actually being populated with journal entries from another system or something. So
Right.
that's why I was curious of how you map. If you can do, say this is inventory, but I also need you to include this. But I think this is going to look at your chart of accounts based on the QuickBooks designed.
There you go.
I would think that this product would be something the Slater Group would be interested in, as kind of a partner or whatever. What do you think, Seth?
Yeah, definitely.
This is on, provide, going to, value-added, model.
Mm-hmm.
Yeah.
A lot of CPA firms are looking for dashboards. My husband works for a large firm, and they're always on the lookout for a tool. So this is wonderful. Well, I appreciate the.
Yeah, no, without a doubt. That's why as soon as I looked at this, I said I wanted to bring these guys on, because I know that this is the kind of thing that people are screaming for, especially something that simplifies it like this does, for the sake of the business owner who doesn't understand ratios and all that, but they'll understand the dollars of it.
Yeah.
So that's what I really love about this. So James, definitely want to have you back, maybe in 2 or 3 weeks. Maybe you want to be there with us in 2 weeks when we have the conversation about cleaning up the data, because that might provide you with some interesting feedback as far as thinking in terms of how you're pulling data from QuickBooks, and who knows. But I think regardless, it'll be an interesting conversation, because I know the first thing I do when I bring on a new client is I'm going to want to clean up their books. And the very first thing I do is I go down the balance sheet and use that as my checklist so that I can satisfy myself that I've got data that's accurate and reliable. Because when I'm consulting with clients, the first job is let's get the bookkeeping straight, and then the second job usually for my particular types of clients is where I put on the CFO hat and say, okay, now let's look down the line, let's lay out the yardsticks, let's do the projections and see what we think things are going to look like in a year or two from now, and all the way down to projecting the statement of cash flow. So we're literally projecting how much cash we expect to have in the bank, and then using that to make decisions about how we're going to reserve money to make major purchases that we know we're going to want to make down the line, and those sorts of things. So it's so important, though, because that analysis is going to be totally worthless if I don't have reliable information to start with. So before you use a tool like Finagraph or any tool that's going to measure analytics of any kind, it's worthless without first making sure that the books are totally clean and accurate, and that you kind of figure out how you're going to deal with anomalies like Sarah described about I've got a third-party application that's just feeding the information into an other current asset account instead of updating the actual inventory account for QuickBooks. So it's those sorts of things that have to be addressed and thought about, so that when you do the analysis and use a tool like Finagraph, you're really clear on how you're going to interpret that information and make the decisions that you're going to make based on it, knowing whatever qualifying information has to be known before you do that. So I think it's really important. I think this will be a compelling session in a couple of weeks. I'm glad it came up because I can really go through the process that I go through, and I take this knowledge from having worked at a CPA firm and done audits and reviews. That's where the process comes from, is you work down the balance sheet. Once the balance sheet's cleaned up, because of the linkage between the balance sheet and the P&L, you've in large part already cleaned up the P&L because of the way that the relationships. You still go through the P&L. QuickBooks, even in Xero, they make it very easy for you to go through the P&L accounts where you drill into an account, and if it's an income account, you subtotal it by customer. If it's an expense account, you subtotal it by vendor, and it makes it really clear and easy to see what's inside that account and whether or not it belongs there. So
that's great.
That's my story, and I'm sticking to it. We'll go through that in a couple weeks. Next week, like I said, I'll be here. I'll kind of gauge the feedback that I get throughout the week. If people tell me they want to come on the Hangout and just chat, I'll be here. I'm available for that. If not, then we'll see you in 2 weeks. And James, thank you so much for coming on. I look forward to having you back because I know there's more to see, and I know I want to see it.
Perfect.
Thanks, James.
Thanks, everyone.
Thank you.
Okay. Bye-bye.
Bye-bye.